Hello everyone, welcome back to another weekly review. So I hope everyone's having a good weekend and preparing for the next week. But today was a 4-day week. It was FOMC on Wednesday and with bank holiday on Thursday, so there's no trading Thursday, and the Thursday and Friday candles were combined into one on the daily chart. But let me get into it. I'm trying to do this pretty quickly. The daily chart is still pressing higher, however, so slowly. There's no change in state of delivery. Bearish, so I'm going to assume we're continuing moving higher. We had a contract expiry too, which brings volatility. I'm open to the idea that today's candle is manipulation. So the fact that we had volatility and there's a lot of things moving up and down in the market since people are rolling over positions because of contract expiry, this could be this initial run on Friday, which went down. Monday could have ushered in more buyers and went to buy stops. Anyone that sold on Friday, shorted on Friday, would have gotten stopped out maybe by, with this candle that went up against the entire range. Once it does that, then price is ready to create a bigger range lower and trend a lot lower. This could be what is happening, but until I see a close beneath a draw higher, which we don't have yet, I'm gonna just assume price is gonna keep doing new highs. But I mean, my daily bias isn't really important to my model is anyway, so it's fine. But price is currently dipping into a 4-hour bullish fair value gap that I could use to see support for price to go higher. The only reason why I'm thinking this is because of how price closed above Thursday's range and at the same time Friday's regular trading hours range. Both of these are examples of changes in states of delivery. So as we close above this run lower and then this run lower, because this did still draw on liquidity on a complete different day, so I do consider this an entire different range, and I would combine it with this range. But because of this, I am just looking for buys once we close above it up here. Um, but I mean, yeah, until we close above it. Oh, and sorry, and this is the fair value gap we're in that I was mentioning. So I could start to see buys from there. Obviously, I think we sell off. And if we were to, go into the next day and trade, just because the 4 hours is bias is bullish doesn't mean that when I go down to the hourly and 15 minutes, my two other higher time frames that I use for bias, uh, they don't need to be in agreement with each other, and so I can always find a bias on a lower time frame that I use to trade into my qualifying and entry time frames, or before going to my qualifying and entry time frames. But then I drop down to the hourly chart, and looking at the hourly chart, I don't see any point interest that can be used through the day inside the respective leg of its market maker X model during the times I trade to go long. So there is this rundown, right, which technically does create a change in state of delivery up here. Um, and I mean this run lower too is another change in state of delivery. So we are bearish, we pull back, we continue going lower. You could look for this gap to resist price. It comes into it here, it's the wrong time, and then the inverse fair value gap, which causes a bit of sideways price action. You'd think, oh, this can be a 1 hour point of interest, but I mentioned how it's not in the current leg of the market maker X model. So if we're in a still in a sell model and we haven't had a bullish change in the state delivery yet, then you could see it come up here and a reject and go lower. But uh, I don't use inverse bullish inverse fair value gaps inside, like it's not inside the market maker buy model. The market maker buy model would start with the sell leg from the high all the way down to the low, and then the low all the way down to the high, which is the buy leg. So inside one of its respective legs, I need a PD array. If I'm using inverse fair value gaps, it's going to be inside the sell leg, one of the bearish gaps that I'm using to inverse to go higher. That's what I would be wanting to see. The reason I wouldn't be doing that here is because the midnight opens all the way down here, right? And because price just as soon as midnight opened, price went higher from there. I never got an opportunity for price to come back to the midnight open, so that I could find, so I then could start looking for a position to go long and capture the day's range. Um, then once 8:30 opens though, that's interchangeably can be used with midnight open for me. So we do have a point of interest on the 15-minute chart, higher time frame PD array. We do have a change in state delivery that brings us higher. So we're not actually looking for sells here. We're only looking for buys on this time frame. and then as price continues goes higher, we get a trade back into the gap, and then we go higher here. And the reason why this change in state delivery actually here, I don't really mention anything, but there is a change in state delivery here, so we can start to go lower on the 15-minute time frame if we have a point of interest, a higher time frame PD array. We do the 15-minute gap, trade into it, fail to go lower beneath it, and we just move sideways, and then we go up and get stopped. But I looked at the 1-minute chart on that day, and there wouldn't have been any entry. So it would have been fine. By the time the entry would have came, it would have been 7 o'clock, and I don't trade at 7 o'clock. So I'm not too shook with that. I'm not worried. But 9:30 does create a pretty good move higher after trading into this point of interest beneath the 8:30 open. And that's what I'm showing here. The only trade I was able to find that day, we have change state delivery here, inverse fair value gap in the blue lines there. So we have the three things I need to go long. I choose to go long on the 8:30 open just because I don't know why. I mean, maybe I wouldn't have in real time, but it is an area that can support price, and it looked good with stop placement. So also another thing is I changed on Fridays. I'm only going for 2RR now. So going forward in this next coming week, I'm only going for 2RR plays minimum. It can be 2.5. It's going to depend if there's a PDA rate nearby above it. But I'm aiming for 2R, not 3. And I'm going to try and keep it as close to 2 as possible, even if it means not really targeting a specific area like a high. And yeah, so you can read the text. I don't know. I think, am I missing a chart? This is 1 hour, 15 minute. Okay, I'm not missing a chart. Yeah, no. So that was a trade. Another thing too is there is a sweep, the 5-minute sweep. I just don't have it marked, but beneath these relative equal lows is 5-minute sweep. Going to the next day on Tuesday, there was 3 wins here and 1 loss, so 4 trades. This is a pretty exciting day, but yeah, another thing is this is ahead of CPI, FOMC, and I know a lot of people probably scared of trading ahead of FOMC, but hey, there was news on Tuesday, and markets were open, people were buying and selling, and guess what? Prices moved. But from viewing the 4-hour chart, order flow looks bearish, and it does not mean I'll only look for shorts. I can always refer to smaller time frame buys. So you know, like I said, we can look for buys on the 4-hour chart. So even though here we get a trade back into the 4-hour bearish fair value gap, just by looking at this time frame, I can't go short. I can't start dropping down to a lower time frame to qualify a sweep and then go short with my entry time frame, because we're still in a bullish order flow looking at this time frame. So I'm still waiting for longs. Next, going into the day, I spotted hourly change in state delivery at 1900, which got me interested for shorts during London. So down here, I'm using the body of this candle because this is where we had an aggressive 9:30 opening run. So you could also look at it as the regular trading hours run if you want to do that. But I know I can use this candle down here, that candle, whatever. This is just a clean from low to high, a clean run. So, you know, I'm using that as a change in state delivery. There's an hourly fair value gap that can resist price. We do trade back into it many, many times throughout the day before finally in the afternoon getting sent lower. So, I mean, this doesn't really look like very good price action at all just by looking at it, but we'll see as we continue to get down into it how it looks like. So far, just from what I've said, the change in state delivery now means you can only look for shorts on this time frame before you drop down. How many times when we trade into this gap do we then go lower? Every single time we trade into it, we go lower. Except for here, we chop around a little bit, but we'll take a look around. We still do end up going lower, but we'll take a look around to what happens there. So price created a change in state delivery on the 15-minute, which during the 300-hour was further positioned to timing a good market move lower. My higher time frame point of interest would have been the 15-minute bearish order block that would be anchored around where the change in state delivery is. So as we have that change in state delivery there after taking buy side liquidity, we trade back to the order block. There is a potential trade at 3 a.m. here inside above this order block as we draw into it and midnight open. So you see how all the things are lining up, and there's a very clean run down to the low sell side liquidity. So now you can't look at this price action, right, and tell me that ahead of FOMC, this is terrible price action. The first trade of the day, and this is amazing price action. There's, that's like quality run there. Then dropping down, you have your higher time frame level. You don't have a sweep, but instead of a sweep, you can use a SIBI, a 5-minute bearish fair value gap with PD array. So you do get a trade into the 5-minute PD array. And then what I looked for there was and again, the 4-hour bearish fair value gap has no real significance. It's not what I'm using as my higher time frame PD array. Remember, it's the 50-minute order block, which is anchored where the CISD is. I just don't show it. But you have an inverse fair value gap, a fair value gap, and a change in state delivery on the lower time frame 1 minute. So I have all three things I need to go short. If I were to wait for price to trade back to the fair value gap or go short on the opening, whatever, there's still enough to get 2RR and put your stop near the high, or at least above the last fair value gap or PD array. So there's still plenty of space, right, to do that, which is nice. And then I took partials at the sell side and then took profit here. I did post this trade recording, I believe. I think I did, or I don't know. I don't remember if I posted the recording of me taking the trade online, but that's the first trade. I say I risk very little because there's less volatility than I'm used to, but it shows I can be consistent. I actually didn't purposely risk little. Yeah, I just accidentally used less leverage, and then my stop was like cheap, and yeah, but I still made a good amount, and I made back some of the two previous losses from last week, and that, I mean, I know it's it didn't usually one trade should make up for two losses with 2RR, but obviously here I'm going for a lot more RR, so I should have had a bit more, but it's okay. In the AM session after 600, the price traded beneath London lows while also sweeping the hourly and 15-minute chart. I would be interested in investigating potential longs in this area on a 5-minute and 1-minute chart. Throughout the rest of the day, there were more opportunities to get long using the 15-minute bullish order block, which sweeps as what our point of interest. With sweeps as our point of interest. So something important to stress is when looking at shorts using the 50-minute chart, it is hard to qualify bearish change in state delivery around 930 open because price is overall consolidating and making tight ranges. Nonetheless, there's no short anyway because we had no 5-minute fair value gap or sweep typical in these environments. So London session really nice, and then we do have what seems to be a pre-market move, which I don't trade the pre-market. I don't really trust it. And then you have 50-minute bullish order block that around 9:30 and 8:30 opening is up here. So there is an idea for maybe a trade if there were to be a 5-minute sweep here, then a 1-minute entry. We can find a trade to go higher. The thing I'm saying here is once we took buy side and we have a sweep, you don't have a change in state delivery until this candle closes. The change state delivery at 12:45. Shorts cannot be taken until this time, and we're already way too low. By the time 1 o'clock comes, which is when I can start taking shorts, you don't really get another fair value gap. You could use a 15-minute order block, but I wouldn't do it because there's an open fair value gap here and there's an open fair value gap there, and there's nothing on the hourly chart that could indicate that a fair value gap that could sum up these two. So there's just no point of interest to go short on as this drop continues going lower. And it's just how it is sometimes. I have to accept it. But I'm trying to investigate more. Let's see what's next. Yeah, I think it's the 9:30. This was the second trade. It can be refined to an earlier entry around 6:40 a.m. using the 1-minute chart, or I could use the 5-minute chart to get in any two ways displayed. So 5-minute change in state delivery, this run lower, inverse fair value gap, there's a fair value gap here, change in state delivery. Either I can get in at the close and stops beneath the fair value gap, I go for 2RR, or I can get in. I can wait till it drops a little bit lower. And then I do enter blind here, but there is a second entry actually on the 1 minute chart when you drop down and look at this 5 minute sweep. Again, there is well, actually, let's just go look at it. Let me look one more time at the 50-minute chart. So yeah, I mean it does. Yeah. So it does hit the order block here, the 15-minute. You watch those lines. I don't see where it is. I don't know why it's not showing, but that level here, that dark blue line, bullish order block 15-minute. I don't know why it's just not showing on my chart. But I mean, it's between the 50-minute sweep and the midnight open. So I think it's where the change to state delivery is. So it should be there, and we do have 15-minute PD array. We do have 5-minute sweep. So 100% we are able to actually go long. We don't have a 5-minute sweep here. We have a 15-minute sweep. This is too far away to be a 5-minute sweep. So we can't drop down at around 6:30 and look for longs. But we can drop down at 9:30 and look for longs because of the 5-minute sweep. Following that, um, another entry can be refined from the previous 5-minute chart. Also the second trade. This is likely the best probable trade. So actually, I'm going to remove a win because technically one of those, wait, there's FOMC. No, it's Tuesday. One of those is the same trade, and three of these are the same trade really. This whether you take this entry, or you drop down to the 1 minute. And then these are just basically the same entries, just different ways of getting in on the 5-minute, and then the 1 minute. But because we're trying to capture really the same move, I'm not, or the same draw, I'm not really going to. I guess no, I'll still count it as a third win. The only thing is like there's something I'm kind of struggling with, and it's the fact that there was a loss as you also want to enter that 5-minute trade. And obviously I didn't spot the 5-minute trade, but if I had spotted a 5-minute trade, I should have seen that sweep, the higher time frame order block beneath midnight open, beneath 8:30 open. I don't know why I went short, but I just did. Um, and it was a proper short, honestly. It's just I should have been able to use my discretion and judgment, and I should have paid more attention to realize that, hey, we could also have a long here. And I want to correct myself there real quick. I just don't feel comfortable, saying I should have. I should have done this. Honestly, it is what it is. There was a buy signal and a sell signal. I decided to take the sell signal. It was the wrong one. I have to just move on. It is what it is. If I had honestly taken all trades as I should, following my rules this week, there was only one loss in the entire week that I could really find, and it was this loss. And I mean, that's good enough. I mean, I don't really care if I miss out on a trade. But the only thing is, I don't know if I should. Alright, so another entry that can be refined from the previous 5-minute chart is also the second trade. This is likely a best probable trade. There is also a loss that it will show as the chart does do a 50-minute change to state delivery at 900. There's nothing that can be done to avoid this. So the change to state delivery at 900. So at the time I'm looking at this draw on liquidity, the run up above this short-term high, and then it closes beneath this candle. So I think because we've taken out and we've closed beneath this candle here too, so there's lots of, like, I guess, a reason to believe we're gonna go down. There's some change to state deliveries lower, and we just don't, when I take the short, obviously I'm not seeing the 5-minute entry for a long. I'm not seeing the sweep. I'm just seeing how we're closing on the 15-minute and how we've closed beneath this entire range, and my model is present. So when I take the short here, I'm looking at this fair value gap. I'm looking at the inverse fair value gap and the change to state delivery here. And then I go short, right, the blue line, which is the low of the fair value gap. You see the higher blue line there. and then I get stopped out pretty quickly. And I mean, honestly, there's nothing really wrong with this. You know, price does drop to the midnight 8:30 open, so I can go short from there. It just happens. It just so happens that I didn't catch the higher time frame entry, the higher time frame model on the 5 minute for that entry and the sweep, and then I ended up going short. And it just is what it is. Then there was also a long, which I wanted to take, but I was too scared of taking after losing this trade here. I didn't want to give up all the profits I made during London. I got up early to make those, and I had already taken 2 trades, and I just didn't feel, you know, completely comfortable um, putting on more risk, which is a flaw. It's not. I mean, over time I can grow better at that, at being able to put on more risk and be comfortable taking more losing trades in a shorter period of time. But I did need a little break there to make sure that I was okay from with the loss and I could continue trading properly moving forward. But this was a really nice trade. There was almost no drawdown. It went to profit really quickly to the draw, and you had everything you need. The 5 minute sweep, change in state delivery up here. So you get in, I wait for a pullback, get in here, boom, stop beneath the fair value gaps, and then profit at the high. So, anyways, that's I think it for Tuesday. We're halfway through now. Wednesday, FOMC day. So when I saw price close beneath the 4-hour inverse fair value gap, I wasn't considering being bearish until I saw how price failed to pursue more expensive prices following the 4-hour hourly sweep. This is when I could go look for lower time frame CISDs. My model was present overnight. There was a setup post FOMC, but it wasn't typical. So the setup that worked after FOMC ended up going into the next day. And I didn't trade FOMC. It was kind of confusing to look at first, but there was a nice setup there. And here's the 4-hour chart. We just continue driving lower from the previous day. And now we've closed beneath this entire range to change state delivery. So now on the 4-hour chart, I can start looking for shorts. The 1-hour chart saw a draw to the 1-hour bearish fair value gap, but this isn't a valid point of interest since it's not what the it's not hold on, I'm talking. Oh, it's not. Oh, the 1-hour chart. The 1-hour chart saw a draw to the hourly bearish fair value gap, but this isn't a valid point of interest since it's not supporting a market maker buy model. Now, what I'm saying here is that when you have this red, pink shaded, sorry, 1 hourly gap, we trade into it. You'd think, okay, well, we've pulled back, we've hit a higher time frame, but because we had a change in state of delivery, you're not looking for sells. You're only looking for buys. So the only thing you can do with this gap is use it as an inverse. Wait till we close above it and use it to buy. That's the only thing you can do with it. Otherwise, you want to look for buys and the continuations using bullish fair value gaps. When we drop down to the 15-minute time frame, I see a change in the state of delivery on the 315 candle. The next step is to pair the higher time frame point of interest, the 4-hour inverse fair value gap, and the 4-hour sweep, qualifying with a qualifying lower time frame sweep. The dotted line marked with an X represents the lower time frame I need before dropping down to the entry time frame, for which in this case is the 5-minute chart. So because I'm using a 4-hour PD array, I can't just immediately go to the 5-minute chart, find a sweep, then go to the 1-minute chart. I have to layer it, and I have to instead go from 4-hour to 15-minute to 5-minute. But this is the change in state delivery in yellow right here after drawing to the gap, sweeping on the 15-minute or hourly chart, and then you have another 15-minute sweep here. Then that's when once you close beneath it right there, you can look for shorts, and it does pull back, hits an order block. This is perfect shorts. Really nice. Looks really attractive. But this is what I would have been using to get in. After the sweep, you have your inverse fair value gap, bearish fair value gap, stop above the fair value gaps, changes to delivery. 2R would have been so easy here. But I'm reaching for just current day as we take the trade. But basically Wednesday's low. And then that's really it for Wednesday. It was just that one FOMC trade. And for Friday, there was 2 trades. The daily chart has made a nice run on sell side liquidity. Note that the Thursday candle is missing due to holiday. Going into Friday, I was bullish at the 1800 candle, as the 1800 candle made a 4-hour bullish change in state delivery, right after hitting the sell side level from the daily chart above. I mean to say buy side. Following is a run higher that trades above Wednesday's high. No, never mind, I do mean sell side. Wednesday's high before doing a 4-hour change state delivery. So we changed the state once in the beginning of the day, and then we changed the state again when it closed beneath this candle here, after rejecting the 4-hour fair value gap taken by sell liquidity. One thing is I heard a lot of people on Friday who stopped trading because they didn't want to go short, but also it was looking scary to go long. And they wanted price come back up to the buy side liquidity because it created relative equal highs. And one thing from what I understand is that just because we go to an area with relative equal highs and we start to form, well, not an area with them, but an area that then becomes an area of relative equal highs, like we go up to a high and we come short of it and we go back down, I don't find that we immediately always go back to that level all the time. We do target it when it's been there for a while and people start to react off of it. But on a higher time frame, as you're forming these candles, people don't really have the time to look at that time frame. It's a big time frame. People take a long time to look at it and make decisions off of it. Just because there's a relative equal highs, it doesn't mean that immediately people are going to assume that there's resistance here and they're all going to start to sell as price comes back to retest this level, or buy once it breaks it. Sometimes it needs to move away from it so it can let people anticipate and think about these things before they actually do them, and notice them too. But I see the same idea going on in the hourly chart. The London session did a dip into a bullish fair value gap that was formed on both the hourly and 4-hour chart. This gap can be used as a point of interest. This would make me long for London unless the 15-minute chart can create a change in the state of delivery. So, for what I say here, the gap for our point of interest, this would make me long for London. Yeah, so if I'm trading from the hourly chart, we have change state delivery here. If the 15-minute chart is also bullish, that's great. But that 4-hour gap can also be a 1-hour gap. If you use that below that high, sorry, yeah, right here, it's just a little bit higher, and so you do have your point of interest there, and at 3 a.m. we do start to go higher from that area. But going into 3 a.m. you see there's a sweep, there's a 5-minute sweep. So if we're layering, sorry, 15-minute sweep, also a 5-minute sweep. I think it's more of a 15-minute sweep, but if we're layering, right, these time frames, this is my sweep time frame, so I'm looking for a sweep to qualify the point of interest. We do that there, we get into the point of interest, we're beneath midnight open, everything we need to go long, start looking for the things we need to go long. And from using the 5-minute chart, here I need to close above this move lower. So I could only go long right there. If I go for 2RR with a stop around down here, I can still get to the buy side liquidity. But the other thing I can do is here, I'm considering this 5-minute sweep, but honestly, I think what I should have done is use a 5-minute fair value gap instead of this sweep and calling it 5-minute sweep. It's the equivalent to the sweep, and then I use this high down to that low to find an inverse fair value gap, and then use this low up to that high to find a fair value gap, and the close, which is to change the state of delivery. But let's just go see what that looks like. So, I mean, the 5-minute, we probably retrace into it here. You have an inverse fair value gap, you got a fair value gap there. You close above this one here. Your stop just needs to be this low, and then you have everything you need in order to go long. You would have had to suffer some drawdown, but this isn't really nice price action at all. There are two sweeps I want to look at inside the chop for the rest of the day. The first sweep would not lead us to buys. Would not lead to buys because we have change order flow to be bearish on the closest higher time frame. The next sweep is valid since it's set up for shorts. So this is a 5-minute chart. You see how many every time we sweep. We might have a trade every time we sweep, but we need the higher time frame to be in alignment with us. And this sweep here, I did take this trade on Friday. I did make money off of it. It did win, but it was a bad trade. It was a faulty trade. And the reason it was a faulty trade is because I was not in any supporting higher time frame PD arrays. So I'm using the 4-hour, right? When we sweep down here, I'm using the 4-hour PD array. I can't just drop down immediately to 5-minute. I need to see a 15-minute sweep. We don't have a 15-minute sweep, so I can't really use the 4-hour fair value gap. And it's just, there isn't really anything that like would have allowed me to find a sweep on the 15-minute chart. And there was no 15-minute PD array I could have used before. But yeah, the other thing too is the delivery on the 15-minute chart. This is actually the big thing I should have started off with, but the 15-minute change state delivery lower. So even though we have a sweep, like it wouldn't matter. There's no bullish change in state delivery, so it wouldn't matter if I take it or not. And this was the trade at another 5 a.m. trade. So again, wait. Oh no, this is London. Oh yeah. This is the one we already looked at on the 1 minute. Yeah, I don't think I should have taken an entry on the 1 minute here because there's no 5-minute sweep really. I don't know if this would be a 5. I don't think this would be a 5-minute sweep, but I can use the fair value gap. Like the trade is there, it's just not as good quality. But this was a really nice trade. We sweep the 5-minute highs. We get into an hourly inverse fair value gap. So that is this one here. Notice how if we're selling, we're assuming we're a market maker sell model. So we have the buy leg and the sell leg. We can use bearish fair value gaps or we can use inverse fair value gaps on the buy leg. That's what I'm doing here. Even though we've taken liquidity, the change in state delivery is still lower, and I'm still assuming prices want to continue making new lows. So right here, the hourly fair value gap draws up above midnight open to, and then you have 5-minute sweep, and after 5-minute sweep, get an inverse fair value gap, a bearish fair value gap, change in state delivery, and go short right about here, down to the low of the day, and I mean 2-hour would have been easy to capture there. So there's still some nice trades, even though it's post-holiday. And even though it's pre-FOMC, there was still some really high quality trades during London, and maybe not just the entire day. And I mean that could have had to do with FOMC, but that could have also just had to do with how just weird price action has been too with the trends. I mean, seeing this in front of a session is kind of doesn't really look enticing because it's just really trended most of the time. Anyways, that was really it for this week. So I hope everybody's enjoyed and have a good day and stay safe.